Hey, beautiful people, welcome to episode 142 of Credit 101. In this episode, we're going to talk about how to easily stop those collection calls and letters, which is one simple letter. Now, I have this letter available on my website, so let me actually show you what the letter looks like so that you guys can see that it is very simple. This is something that you guys can definitely fill out, but this letter is available for free on my website. And all you have to do is just mail this in certified. So if you go to Rickita.com, you'll be able to get the letter here, if you can see. Now, usually it's an area like right here. I don't know why it's not showing up on my, oh, here it goes. It's just late, I guess. I was confused a little bit, but here it is right here. Free dispute letters and credit card list. This is what you guys want to look for. Just click right here. It'll be emailed to you instantly. Okay. And I'll teach you guys how to get your credit score to go to 60 points in 60 days also. So definitely just click there to be able to get that letter. Now, let me talk about this letter. This letter is basically a debt validation letter. If you guys are getting like collection calls, or if you guys are getting collection letters, or if an account is on your credit reports, you can send this letter certified to the company. So if it's Midland, if it's LVNB funding, whatever company it is, you can actually mail this letter directly to that company. I suggest that you send it out certified. Once you do that, they have to show debt validation, but then also in the letter I say, and that you guys are basically on saying too, if you mail it, don't call me, they can email you now. Don't call me. Don't communicate with me at all, other than let me know if you're going to do any further action. In terms of, sometimes if you guys are inside the statute of limitations, which means this collection company can technically sue you, because collection companies have a certain amount of time to sue you, a certain amount of years to sue you, depending on what state you're in. So just Google statute of limitations. And actually, just in case you guys need like the spelling or something, my next video I have like this right here. This is for the next video, but you guys can use it too. Look up statute of limitations for your state. Now, let me give you an example. When I had Midland contacted me, they put right on their notice to me that we cannot sue you. They put that right on a notice, which means that they knew that they were outside the statute of limitations. They were just trying to get money from me. They were trying to scare me into paying for it, and I wasn't going to be scared into paying for it. But if it's outside the statute of limitations, they can't really sue you. They'll be perfect for you. Now, sometimes when you send out letters like this, be warned that some companies may want to sue you. Let's just be honest. You just have to do a lot of research and see if this is an account that if this is a company that like to follow our lawsuits. Some companies just like to send a lot of notices, and eventually they'll get people to pay. But just definitely look into this. Now, again, let's go ahead and actually look at the letter so I can show you guys like what you need to fill out. And this is actually in a full package. So it's actually more than just this letter in the package. Like if you go up, this is from like a previous live video where I showed you guys the actual dispute letters to the credit bureaus too. So definitely you guys can mail these letters out to the credit bureaus. You got inquiry removal letter in here too. So this would be perfect. But you're going to put your information here. And if you want to, I suggest, especially if you got like a lot of negative accounts, like when I used to do in-person events, I used to actually print this out, because you can just print this out and then just hand write it in, like just write it in. But put your name, your address here, put the date, dear, whatever company it is. Did they send you a notice, or did they respond to a listing? Like, or you guys can cross these both out, honestly, or just make another section. You called me, and then put whatever date like you called me 5/5 of 2024. You know, you can just put that, but just try to bold that so that they can make sure that they see it. Okay. With whatever you want to put right there. And then this information you're going to leave the same. And then your name is going to go here. Please read this before you send it out. Know exactly what you're sending out. This right here is when I said, hey, I want you to stop, telephone calls to my home or my place of employment. Anything will be considered harassment, like stop all type of attempts to contact me, basically. And you can add anything extra here if you want to. All future communication must be done in writing, sent to the address noted in this letter. Now, when I sent out a lot of these letters to companies, and you, like, say if you get a letter in the mail and they're saying, hey, we got a new debt for you, you got 30 days to respond. If you send out this letter a lot of times will just make a company just go away completely too, in terms of they'll try to sell the debt to a new company and you don't have to worry about this company anymore. And that's why it says things like all further communication must be in writing, like that, you know. So definitely fill that out, and then you can give this to them too. Please provide all this information, and then attach all of print this out for them too, so that they can fill this out and send it to you. A lot of companies will not do that. They'll just be scared and they'll go away. I had that happen a lot, where they were just scared and they just went away. But to me, a lot of times that is the goal. Like, just leave me alone until we get outside the statute of limitations. And you have to learn the statute of limitations, because some states is 6 years, some 10 years, 3 years. You just have to learn what your state is. But I'll definitely see you guys in the next video. Bye-bye. Hey, beautiful people. Welcome to episode 143 of Credit 101. In this episode, we're going to talk about what you guys should do if your collection actually turned into a lawsuit. This is a quick video. This is not going to be a very, very detailed video. I suggest you get hints on what to do from this video and actually do a lot more research. And just make sure, above all, you make sure that you respond to your lawsuit. Like, you will automatically lose your case, you guys, if you do not file an answer, if you do not show up. So above all, like, I don't care anything, just show up, okay? And just make sure you don't ignore it. It's not going to go away. If you guys need further help with this, make sure you guys seek an attorney or a lawyer that can actually help you with this full process. They can go to court with you. They can even probably give you a few suggestions on what to do, what not to do. And with a lot of the lawsuits out there, sometimes these different companies would actually file a lawsuit outside the statute of limitations, meaning that they cannot do that. So companies have a certain amount of years to actually file a lawsuit. So look into the statute of limitations to see how long they have to actually sue you. And when you guys go to court, or even in your answer, ask for a credit contract. You want to be able to see how they actually own this debt, and you don't just want to see like a statement. Ask for a credit contract and do a lot of research on what exactly these companies should show. Because I'm not an attorney, I don't want to give y'all legal advice. I'm just going off of a list. So let me just say that. Like, I don't know exactly what would be considered just legal advice, but just ask for a credit contract. When I went and sat in a lot of times, or even when I looked at certain cases, it was certain documents that they needed to have. So definitely, guys, do your research on this, and understand that judgments no longer show up on your credit report. So if you do not show up and you get a default judgment, or even if you show up and you still get a judgment, they're not going to show up in your credit reports. Only thing I would think about with judgments is garnishment. So watch out for a garnishment. I know, like in Wisconsin, if you get any type of state assistance, they cannot actually garnish you. So try to see if you guys have certain things like that in your state. Each state is different. So try to look in your state and see exactly what they have, because they may have certain rules in terms of garnishment, and when they cannot garnish you, the amounts that they can garnish you for. So definitely look into this. If you guys had any fraud charges on your case, ask your lawyer to look out for these fraud charges, because if you guys try to get this discharge in bankruptcy, it won't be able to get discharged. So this may be something that you guys definitely want to look out for. If you guys have any additional questions about this, you can definitely go to my website, Rickita.com, and schedule a call, or my phone number is 833-Rickita. Right now it's summertime when I'm actually recording this, and I'm not taking calls all summer unless you guys are inside of my memberships. You can get you can become a member. I'll be happy to talk to you guys. Or if you're already a member, let's talk about it. But definitely, if you have any questions, seek out a lawyer, because they're the one that's going to really be able to help you hands-on with this case and actually possibly give you some legal advice. Okay, I'll see you guys in the next video. Bye-bye. Hey, beautiful people. Welcome to episode 144 of Credit 101. In this episode, we're going to talk about the tax impact when you guys are getting your loans forgiven. So there's a few things I definitely want to talk about. If you guys ever have any questions, drop them down below, and understand I'm only talking personally. I'm only going to reply to those people that are subscribed. So make sure you guys are subscribed when you leave in comments. Okay. Now, the thing is, when you guys get your, say if you have like a foreclosure, say if it was a short sale, a deed in lieu of foreclosure, property repossession, default on a credit card bill, and then most settlements, basically or specifically when it is less than the contract amount, say if you're getting some type of settlement, you're paying less, then a lot of times you guys will receive a 1099-C form. And when you guys receive this form, you're going to need to file form 982 with the IRS, because they want you to count whatever the difference is. They want you to count that as income, whatever it is that they've forgiven for you guys. And this is especially if these companies are writing off this debt. Now, some mortgage forgiveness occurring between 2007 and 2025 will not include this, so you won't have to actually pay on it. And then two, it's up to $750,000. So double check the numbers. As time change, things change. Now, if you work for certain professions and you get like your student loans, like if you're a teacher and you do like a forgiveness, if you get those canceled, then you probably don't have to, most likely, you don't have to actually file this form and count that as income. It just depends on the profession. And I want you guys to look it up and see if maybe the profession that you have will count. Now, if the debt has been canceled, but it would have basically been a deductible if you had paid it, then you don't have to do the form. You won't actually get the 1099-C form. You will not have to actually pay taxes on that. And remember, when they count that as your income, you have to pay taxes on that, basically, on that money. So if it's $5,000, you have to count that as $5,000 in income. You have to pay taxes on it. Or also, too, if you guys had this debt discharged in bankruptcy, you guys do not have to pay any taxes on it. Now, this is usually for you settle with some of these companies that's out there. Say if you settle with Discover, they may go ahead and send you that form. But I suggest you guys, if you're concerned about actually having to pay taxes on it, if I were you guys, I would actually just do further research on whatever debt it is. And then also, you can also ask the company, whoever you're settling with, ask them exactly what they're going to do with that debt, so you can know what's going to happen. Now, usually they have to report at the end of the year, so you probably not going to get a form a lot of times until the end of the year. Okay. Now, hopefully this video was helpful. If you guys have any questions, definitely let me know. Another video. So on this video, I want to talk to you guys about debt relief services that I want you guys to avoid. A lot of times when people have debt, they want to go to a company that say that they're going to help them in terms of paying off these debts. And if you guys see these different things I'm going to show you on the screen shortly, or if you guys see that maybe this may not work, maybe you need to not go with that company. And then in the next episode, I'm going to talk about like which type of companies, such as sometimes people will go to, like, for debt settlement, they'll go to like payday loan stores, or they'll take out personal loans, but the personal loans have horrible interest rates, things like that. We're going to talk about that in the next episode. But in this one, when you guys want to know, which ones to avoid, I'm going to tell you some red flags now of things you need to avoid. So you need to avoid companies that set up long-term payment plans with your creditors. You need to avoid this. You also need to avoid companies that's going to negotiate some lump sum settlements. And we're going to talk more about this in the next episode as to why. But the only thing I want to tell you guys now is, for simple things like this, you can do it yourself, because you'll end up paying fees to these companies. And I think previously I did some negotiation letters in a previous episode. I did have those available. I need to find those and make it available on my website. I made it available for free also, so that you can settle with all your companies. It was free. You can mail them out. And that's why I said you can do it yourself. like for those two, it's like I can do myself. Also, debt settlement companies that's going to ask for upfront fees. You don't even know sometimes how this stuff is going to work. So if you see the upfront fees, you need to watch out. Also, debt consolidation loans with high interest rates. So another reason why I really don't like this is the main thing. A lot of times when you have certain debts, you're not being charged interest. So say if that you owe $300 as an example for a debt. If you owe $300 for a debt, they're not charging you interest by the day, by the month, by the year. So if you owe $300 today, you're going to owe again that same $300 in 2 years or a year. So a lot of people will lump a whole bunch of those together. Oh, I got $1,000 one that's like that, $1,500, $2,000, $300. They'll put all of those together and then they'll get a high interest loan. But that's not smart, because think about it like this: you're not being charged interest. You'll be better off just saving your money and just negotiating and paying out as you get the money. You'll be better off doing that than to do high interest rate loans. Also, payday loan companies, we talked about that for sure. For-profit debt management plans, and also any type of debt elimination scams. Like, just avoid all of these different things. Now, in the next episode, we're going to go more into the difference between debt settlement and debt negotiation. We're going to go into that because that's going to be a key thing that you guys definitely need to learn if you guys want to figure out some debt relief. And definitely make sure you guys check out my blog too, Rickita.com. I always have a blog that's tied to this. You guys can read and get even more information, just in case this is not detailed enough. I usually make these videos to spark something in your mind, and if it's what's going on with you, you know to continue to look further at the blog and get the complete list of information on what it is. And if the video is not what you need, you thought it was, then it's like, okay, good, go about your business and you have a great day. But hopefully that this is helpful. We need to do episode 146 next. Hey beautiful people, it's Rickita, and I'm back with another video. So this is going to be episode 146 of Credit 101, and we're going to talk about debt negotiation versus settlement. Now, I want to let you guys know that both options basically is going to aim to reduce your debt burden. They involve different approaches and also potential impacts on your credit. That's really the biggest thing, because I want to still, like, even if I'm paying off debt, or for you guys, even when you guys are paying off debt, I still want you guys to preserve your credit if you can, because that is very, very important. And building your credit back up can be very, very hard if you're basically getting late payments and things like that. So the first thing is debt negotiation. Let's talk about that. So the main thing is they want to, a lot of times, adjust your terms. So they may negotiate like lower interest rates for you, extended repayment plans, or waive fees. In a previous episode, I don't know where those documents is at. Maybe I'll find the link for that one, but I put together documents where you guys can do this on your own. It was free. I was like a Google Doc that I made. You guys can download all the negotiation letters. Hopefully I'll find that link and put it down below in the description or in the comments, because it's going to be very, very helpful to you guys, because you can do this stuff yourself. And the goal is to remain current on your payments and avoid defaults and delinquencies. You don't want to mess up your credit moving forward. You want to just negotiate, hey, can you waive some fees for me? Can you extend my payment periods? You know, things like this. Can we lower the interest rate? You want to keep all your accounts good. You don't want to mess up your account. Now, so the successful negotiations can improve your payment history, because you're not having late payments, you guys, which is good, and can improve your credit score over time also. Now, on the other hand, you have debt settlement. Now, with debt settlement, you can negotiate to pay a portion of your debt in a single lump sum, which the creditor agrees to accept as full payment. And that's usually what debt settlement is. And in the last episode, I told you all, for debt settlement, do not get high interest rate loans. Figure out what the company want as a settlement, and during the time you want to settle your debt, just put a certain amount of money into a separate account and keep filling it up, and then as it fills up, you can go ahead and settle with the next company, whoever it is. You can already call them ahead of time too and set up some type of lump sum settlement. But usually when you set it up, they're gonna want that money right away. Like usually, like when I have settled debt in the past, they want the money right away. So say if you say, oh, I got a $2,000 debt, I'm gonna settle it for $600. They're like, okay, let's process payment today. Like, you know what I mean? Not know, oh, can I do this in 3 months, 4 months, a year? Usually they want their money right away. So keep that in mind. But if you do hear from them and they say, oh, we can do it for this, at least you can know what type of terms they'll be on, or how do they feel about certain things. If they settle with you saying $600 before, why won't they do it again, or maybe go up just a little bit? Kind of where they're at with their number, which is good. Now, often debts need to be in default. Usually, if you owe a credit card and you 60 days past due, a lot of times, like most times, I don't know, me personally, I never heard of anybody having a debt like that. And they're like, you know what, I'm just going to settle it out. Like, for instance, you got $2,000 debt and we pay $600 on it. Usually it needs to be in default. It's already charged off. And a lot of times too, it already went to the collection company, but that's not good for your credit, which is not good. So debt settlement can significantly impact your credit negatively, as it indicates you do not pay the full amount owed and you have a lot of late payments. Okay, so understand that if you have some time on your hands, which we all got time on our hands, and if you really have a lot of debt and it's really suffocating you, you all should get the debt settlement letters that I have and mail them out. Figure out which ones I have. I have a whole video on it. I just have to make sure I find it for you all too, so you can know which letter to use, how to fill it out. I made a whole video about that, but hopefully I'll find that video. I'll tag it because that's going to be very, very helpful to you all. And I'll see you guys in the next episode where we're going to go further into. Hey, welcome back to episode 147 of Credit 101. In this episode, we're going to talk about the FTC regulations for debt relief services. So for those people that's thinking about doing some type of debt relief service, please check this out and see if you guys have like different regulations like in like your state, because you guys can have special ones for your state too. So see if they have any special like regulations before you consider a company. And then I think in the last episodes we talked about how to find a company, what to look for, what not to get, So the first thing is that they're prohibited for charging fees before they settle or actually reduce your debt. Now, I told you all before that I had a free, it's like a Google Doc that had like 10 different, or I think even 15 different letters that you can use to reduce your own debt and settles your own debt. So definitely check that out. But they are prohibited for charging upfront fees. And that Google Doc was totally free. So you really don't have to go with these companies. But if you decide to go with one, just know they cannot charge you any upfront fees. So payment is only required once the service has been successfully negotiated at a reduction in your debt. Once they do that, then it can charge you a fee for it. Now, the next thing is that they must provide specific information before you sign up for their services. So they got basically some disclosures they need to let you know, like how long it will take to see results, the total cost of the service, any potential negative consequences of using the service, such as sometimes your credit reporting will get messed up. So that's something that they need to let you know, like, hey, since you're not paying on this account anymore, you have a chance of them actually reporting late payments, which can drop your credit score, just letting you know different things like that. Now, another regulations is that if a debt relief company requires you to set aside funds for settlement offers, these funds must be held in a dedicated account. So they must be maintained at a financial institution. This is the part that I like, that you guys, these accounts must be owned by you, which allows you to withdraw the funds at any time. Because I just thought that these companies, a lot of times they just take the money and then they settle it. I don't know if the money is available that you could just take it at any time too, to use it for whatever, say if you don't want to settle anymore. But it must be free from any fees too, for the maintenance of the account by the debt relief company. So they're prohibited for making any false or any type of claims about their service that's not true, that they can't back up, basically. And they cannot mislead you about their success rate. Falsely claim affiliation with government programs, and make guarantees about the amount of debt reduction or time it will take. They cannot guarantee, like, I guarantee this is going to be done in 5 months. They cannot guarantee it. They can always say, well, it could possibly take this long, but they cannot necessarily guarantee it. But this is basically the FTC requirement. So if you guys are thinking about getting any type of debt relief, then definitely check this out. And then I'm going to talk about debt management plans and how they operate in the next episode. So definitely stick around. Hey, beautiful people. Welcome to episode 148 of Credit 101. And in this episode, we're going to talk about debt management plans and how they operate. So if you guys wanted to actually sign up for a debt management plan, I want to talk to you guys a little bit about what you can be looking forward to. And make sure when you find a company, you ask a lot of questions. I am so nosy, y'all. I ask a lot of questions, and that's honestly how I know so much too, because I ask a lot of questions and I read a lot and I do a lot of research. So the first thing is you have to do some type of assessment and budgeting. So this is going to be your initial counseling. So you're basically going to start meeting with your credit counselor, and then they're going to assess your financial situation, including your income, expenses, and your total debts. Then after that, you're going to actually create the budget. So your counselor helps you create a budget and determine how much you can afford to pay towards your debt each month. When I did something like this for myself, I honestly listened to Dave Ramsey. Dave Ramsey said, put all of your debts from lowest to highest, and then you start just ticking it off. You cut a lot of stuff out your bills. For me to cut a lot of stuff out my bills, when I say ticking it off, you paying it off. I'm sorry. When I cut a lot of things out of my bill, what I did was I just started recording all of my transactions, and then I started seeing which ones I no longer needed, and I saved a lot of money that way. And then after I paid all my bills and I put a little bit aside for, things that can go crazy, then I actually just started putting all of my extra money on the lowest debt, going all the way to the highest debt. I just started paying them off. But once they're paid, you guys, you no longer have to worry about paying them. So that's something I personally did for myself, just in case you guys want to just avoid going to a company, you want to do some things for yourself. Just look into Dave Ramsey. Trust me. Now, the next thing is debt consolidation. So if you guys do debt consolidation, you are going to make a single payment every month to the credit counseling agency. And then what they're going to do is they're going to distribute that payment to the creditors according to the agreement that you guys are going to come up with. So you guys will talk about how they're going to pay, who they're going to pay. This is something that you guys need to know. And remember, how you're going to pay, again, I always did the lowest debt to the highest debt. I just started with the highest, paid that one first, and then went down. It was really that simple, but you want to talk to them and see how you guys are going to set up. And then also we had the negotiation with creditors, so interest rate reduction. So the credit counseling agency negotiate with your creditors to lower your interest rate and waive any late fees. I gave you guys a free document, and I need to make sure I put all this on my website. I just have some last little finishing touches and stuff that I'm trying to do on my end, but I need to put everything on my website because I have so much of this stuff for free that you guys can use. I gave you guys these things where you can negotiate on your own if you wanted to try to see if you can get your interest rate lower, just in case you didn't have extra funds or you didn't want to go with a company, like how to do this on your own. I gave you guys those documents for free. And then after that, you guys are going to have a new term. So they may also work to extend your repayment period to make monthly payments more affordable. So again, that's part of your negotiation. Next, we have to talk about is the repayment periods and the duration. So typically, these are going to last like 3 to 5 years, depending on the amount of debt and the agreed upon payment terms. But 3 to 5 years, that's a lot of time. To me, that's like bankruptcy, chapter 13. So that's a long time, but the credit counseling agency monitors your progress and ensures that payments are being made to creditors as agreed. I also suggest that you guys get used to this and you guys track this also yourself. Now, we also have debt satisfaction. So once all debts are paid off according to the plan, the creditors will update your credit reports to reflect the completion of the debt management plan. Now, last but not least, this can positively impact your credit score over time, but there may be a temporary dip as your creditors report the account status. So sometimes when it comes down to these accounts, if you guys were already being reported late, it's going to take a while sometimes for them to come back up and start reporting you as current. So just understand that it may be your credit may be temporarily changed, but your credit score can always go back up. You're just going to have certain dips. So hopefully this was very helpful to you all. In the next episode, we're going to talk about the benefits and drawbacks of debt management plans. We talked about like what it is, but we need to definitely go into detail about the benefits and the drawbacks. Hey, welcome to episode 149 of Credit 101. In this episode, we're going to talk about the benefits and the drawbacks of actually setting up the debt management plan. So let's get right on into it. If you guys have any questions, drop them down below in the comments. Remember that I really only answer questions or reply to comments from subscribers because I have so many comments. I just make a priority to people that subscribe. So make sure you guys are subscribed if you want me to actually reply back to your comment. Now, the first thing is the best benefit is that you guys are possibly going to get lower interest rates. So when you guys sign up for these debt management plans, the credit counseling agency should talk to your creditors and negotiate a lower interest rate. And that's going to be good because it's going to help you pay off your debt faster, because the lower interest rate that you are paying, that means more money is actually going towards the actual debt, like the balance of what you actually owe. So that's really nice. Now, you also have simplified payments. So you're going to make one monthly payment to the credit agency. What they're going to do is they're going to distribute this to all your counselors. It's just going to make your finances so much easier. Just make that one payment. I told you guys about how I follow Dave Ramsey, lowest to highest, start ticking them off that way, just paying them off that way. But it takes a lot of thought to do that. You're not just paying one simple amount. You got to figure out what extra money you have left over after your bills, and you got to put all that on your debt. So definitely this is much more simplified. Also, you have reduced or eliminated fees. A lot of times when they negotiate these debts, they reduce your fees. So the creditor will say they'll waive some of your late fees or any type of other penalty you will have, and that's just going to help you avoid any additional costs. And you guys are possibly going to stop these collection costs because the creditors are typically prohibited from contacting you directly about your collections once you are in these type of plans. So that's really good. It's just less stress. I know dealing with these companies and having them call you all the time, it can be very irritating. Also, you have the structured repayment plan. So usually you guys are going to have these paid off in 3 to 5 years. It's going to be structured. You're going to stay focused, stay motivated. You know exactly what you're paying based off of whatever you set up in your plan. So it's very structured for you all. Another thing is you're going to get credit counseling support. So if you ever have any questions, you're going to be able to ask them, your credit counselor, any questions that you have. And then also they're going to give you financial education at the same time. Now, I know we talked about a lot of great things, but we do have some drawbacks. So we definitely do have some drawbacks when it comes down to all of these different plans. So there could be an impact to your credit score. So while you're going through the debt management plan, there can be impacts to your credit score. You may see that some accounts may be reporting you late and you're waiting on them to start reporting you current, or report that you do have some type of payment plan set up. But even sometimes if they were to say you have some type of payment plan set up, depending on what comments they put, some creditors can look down on that, like what's going on with this account. You do have to pay fees usually for these credit counseling agencies to set up or even manage your plan. You guys are going to have limited unsecured debt. So generally, these are going to cover unsecured debt such as credit card balances, medical bills, and personal loans. So secured debt like mortgages, car loans are not included in this type of plan. So keep that in mind. Commitment is required. You are setting up a plan, and typically going to take 3 to 5 years. So you guys have to understand that this is not an overnight thing. This is a commitment saying that you're going to actually do this. You have the potential reagent of your accounts too. You have to think about a reagent as you're going to pay these companies. So now the last date of activity can be the last date of payment. So now you're re-aging these debts. So keep that in mind. Some debts you probably don't want to put into this plan because they're going to be outside the statute of limitations, and they can't necessarily sue you anymore, so you might not want to put them in the plan. So just look at potential re-aging of your accounts, because it's very, very serious. Also, creditor participation. Not all creditors may agree to participate in this. You have to understand that. Or they may offer like a good terms for it. You might not like what they offer. You might just say, you know what, this is not what I want. So just keep all of that in mind when you guys think about the benefits and the drawbacks of the debt management. Hey, beautiful people, it's Rickita. I'm back with another video. So in this video, I want to talk about debt management plans in Chapter 13 bankruptcy. And a few episodes ago, I said the debt management plans, you know, this can be 3 to 5 years. And I was like, this is so much similar to a Chapter 13 bankruptcy. So I definitely have to tell you guys like what's the key features of the debt management plan, and then also a Chapter 13 bankruptcy. Now, when it comes down to the debt management plan, there is a few key features. So the first thing is eligibility. So usually you are generally going to be able to do it on unsecured debt such as credit card, medical bills, and personal loans. It's typically going to take about 3 to 5 years. So that's something to think about. You guys have to think about the interest rate. So often the credit counseling agency is actually going to negotiate lower interest rates with the creditors for you. You guys are going to have setup fees for this, and it's going to be charged by the credit counseling agency. You also have to think about the credit impact. So enrollment in the debt management plan can initially affect your credit score, but it can improve as you make regular payments and reduce your debt. And then also think about, not all creditors are going to let you participate in the debt management plan, okay? Or offer, you know, the plan that you will want. So that's something to think about. Debt management plan, I believe in episode 149, the one I just did, we talked about just more things if you want to learn more about the debt management plans. Now, for the key things for Chapter 13 bankruptcy, the first thing is eligibility. So usually this is going to be available for individuals with regular income who has unsecured and secured debt within certain limits. So usually with the debt management plans, you're only usually thinking about unsecured debts. We're not talking about mortgages and automobiles, you know, cars. So if you're thinking about saving those things, or you want to include those in your plan, then you may want to go towards a Chapter 13 bankruptcy. Or if you want to make sure that you're going to save these assets, if you're going through something, then you may want to do a Chapter 13 bankruptcy. So if you're going through a foreclosure or something like that. Again, it's going to take about 3 to 5 years. Interest rate, creditors are generally paid according to the terms set forth in your bankruptcy plan. So you're going to have a bankruptcy plan just like you have your debt management plan, and they're going to be paid whatever that's in that plan. You guys are going to have court filing fees, and you guys are also going to have some attorney fees. So keep that in mind. Credit impact, you are filing Chapter 13 bankruptcy. You're going to have a bankruptcy listed on your credit report, that which can remain in your credit report for 7.5 years. Okay, well, for 7 years. So you have to keep that in mind. And usually bankruptcies be on there for 10 years. Okay, that's if you're going to do Chapter 7. So you have to understand that's going to be reported. Plus, a lot of your accounts are going to be closed right away. They're not going to be on, they're not going to be eligible for you to continue to use. They're going to a lot of times be closed. So you'll have new closed accounts in your credit reports. So it's going to greatly impact your credit. And you actually going to, some debts are going to be partially discharged, while other debts are not, while others are not going to be fully discharged. So you got to think about, you cannot discharge your certain taxes and child support. So those are key differences. Just keep in mind that you do have options. This is just to give you like some thoughts about what's out there. There is much more on my website. I actually did a full blog for this actual video. So if you want those details, please check out my website. It's way more information on there, but hopefully that this was actually helpful. Hey, welcome to episode 151 of Credit 101. In this episode, we're going to talk about choosing a quality credit counseling organization. So if you guys are going to do like straight credit counseling, like full on counseling about your overall credit, then I want to talk about a few things. So the first thing is, you guys have to make sure that they are accredited. See if they are accredited in the NFCC and the FCAA. Also, check for nonprofit status. See if they're actually a nonprofit. A lot of these companies are nonprofit, and you just want to make sure you verify that. And also see if they have any type of reviews. This is for a lot of companies, so definitely check their reviews and see what their reviews are saying about them, and understand the different fees that they have. Don't just, just say, oh, I like the company. Look and see what fees they're actually going to charge you. And another thing to check also, not only just I put review the services, but actually when I put review their services, we actually should talk about actually looking to see what exactly they're providing. Like, what exactly are you going to do? Are you going to do budget counseling? Are you going to do debt management plans, credit report reviews, financial education? Like, what exactly you're going to get? And then make sure that they have quality customer service. Verify their experience and expertise. You can do this by seeing any results that they have had in the past. Maybe someone said what they've been doing, see how long they've been doing it for. Check for any conflict of interest. Sometimes these companies they can be owned by another company, and you don't know that they just have a certain type of agenda. So just, see if they have any conflict of interest, and make sure you get some type of written agreement. And no matter what, just trust your instincts. You're going to know who you should be working with and who you should not be working with. But understand too, when you're working with any company, if there's anything that you have to do it. Okay. Make sure you're doing your part too. Because sometimes you'll find that you think that a company is not for you, but it's just that you're not doing your part also, and you're not doing as much as you can do. So hopefully you guys will be able to look at these different things and find your great. Hey, beautiful people. Welcome to episode 154 of Credit 101. In this episode, we're going to talk about how long it's going to take to get new credit. Now, new credit can be so many different things. You got credit cards, personal loans, auto loans, you're trying to get a mortgage. These are different things. So we need to talk about the time frame for everything. And if you guys have any questions, drop them down below in the comments. Understand that I am personally, just me. If you want me personally to answer your question, I'm only personally answering questions for those people that's actually subscribed. So yeah, that's it. Make sure you guys to subscribe if you really want me to answer your question. If not, hopefully somebody around can answer it for you, and hopefully it is correct. Now, the first thing is credit cards. For credit cards, y'all can just apply for credit cards right online, and you can get an instant answer. So usually when you're applying for credit cards, you can get an instant answer. Sometimes they may say, hey, we need to be able to do some type of verification, and that could take 7 to 10 business days. But if you guys get approved, it's usually going to take about 7 to 14 business days for you actually get that card in the mail. But it can be a quick process. Sometimes some credit cards give you instant access to your line. I know they did that for my GM rewards. I was able to get instant access. I was able to add it to the wallet right away. I think my Apple did the same thing. It was a few credit cards that allowed me to have instant access right away. I added to my wallet on my iPhone, and I was able to use it right away. So understand that credit cards could be sometimes an instant access kind of thing, or you have to wait 7 to 14 business days for them to come in the mail, and possibly 7 to 10 days for you to actually do verification. Now, personal loans, on the other hand, usually with personal loans, it's going to take about 3 to 12 business days. Some personal loans can give you an answer right away, let you know you're approved. Some of them can actually give you the funds same day, next day funding, usually 1 to 5 business days. And usually you want to get direct deposit or a check with this personal loan. But usually for the approval, they can tell you right away whether or not you're approved. And if they need verification, it may take a few business days for different verification to go through, like anything. Okay. The next thing is auto loans. Usually auto loans, they can tell you right then and here, like, what's up. You can, depending on your credit score, you can go right to a dealership, say, I want this car. You can already have your financing before you get there. Like, say, if you go in Navy Federal, they can pre-qualify you, let you know what it is. Maybe they need documentation, maybe they don't, but you can be able a lot of times to walk away by the end of the day with that car, if not even sooner. Okay. Than just waiting, because sometimes you gotta wait hours depending on your credit. but it's something that can be done in a day. Like, you want a car today, we're getting you a car today. Okay. So understand that when it come down to auto loan. Now, the next thing is we have mortgages. Mortgages, usually, if you want to get a mortgage, the mortgage is going to take a lot longer than a lot of the other accounts. It's going to take about 30 to 90 days because you guys have to do the application process. You got a lot of verification. You got to actually find the house, close on the house. It's a lot that actually goes through, it's a lot that goes into getting an actual mortgage. So think about 30 to 90 days. What can make it go faster is you just having all your documentation ready, your credit being legit, it's where it needs to be. You have your money ready. You know what the house is already. You already know what everything is. It can go a lot faster. And if you're doing inspections, appraisals, all this, try to get all that stuff done faster. Or you can also get you can ask for underwriting to be done before you actually start looking for the house. So that process can start even sooner. Because sometimes people, when they get approved, they can ask to get full underwriting at that time too, so that they can know for sure that they're approved, not just some pre-approval. Okay. So understand that it could take about 30 to 90 days. Now, last but not least, on another thing is sometimes you guys may want to do like a HELOC, a home equity line of credit, or just a loan too, line of credit or a loan. Now with these things can take about 2 to 8 weeks. Sometimes when you go ahead and apply, they can tell you right then and there that you're going to be approved for it, and funds, you can receive these after approval. It'll just take a few more days for them to actually give you the funds. But this can be a faster process than a mortgage because you already got the house. Everything can happen faster. Understand these different things though. When it come down to getting approved, you need to know what your credit score is and your credit history. The stronger your credit is, the faster your approval time can actually be. Have your documents ready. If you know you're doing a mortgage, have your identification, have your proof of income, have your tax returns, whatever they're going to need, have everything ready right away. And then understand that different lenders take different amount of times too. So understand some can be faster, some can take longer. And again, with the different things that you have to understand, like the different type of accounts that you want to do, you have to understand that these different accounts just take different amounts of times too. So just check your credit reports, gather everything. If you can, apply online. And if they got some type of pre-approval, do the pre-approval so you can know yes or no, whether they're going to give you the credit card in general, okay, like at all, or give you the personal loan, the auto loan. If they can do some type of pre-approval for you to tell you yes or no on your odds. That will help you so much because you could just do the pre-approval, especially if it's online. You can know within minutes or seconds. So hopefully this is helpful. In episode 155, we're going to go over so many more things. Remember, make sure you guys are subscribed. Hey, welcome to episode 155 of Credit 101. In this episode, we're going to talk about how long it's going to take to get a mortgage after you had a foreclosure. So if you guys have had a foreclosure in the past, this can be a very beneficial video for you if you're thinking about getting a mortgage again. I want you guys to keep this in mind. You want to talk to the lender and ask them directly, because some lenders can do miracles sometimes, or maybe it's a loophole or something that you guys can do. So just take this information as okay, some knowledge I can have, and talk to an actual lender so that they can tell you how long you'll really have to take, or see if there's some way to get anything done faster, or see if there's a workaround. If you guys have any questions, put them down in the comments. Understand that I'm only answering questions from subscribers right now. I just want to make sure I answer all of my subscribers' questions only, because there's so many of them, and I want to focus on those people that at least press the subscribe button. So make sure you guys press the subscribe button if you want me to answer your question. Now let's get right on into it, because this is not that complicated. Like, let's just go down the list of the different kind of mortgages and then talk about how long it's going to take. So when it comes down to conventional loans, we're talking Fannie Mae, Freddie Mac. Go to the original videos about these. We did this earlier in Credit 101. We talked about this. When we're thinking about this, we're thinking about like a 7-year waiting period. Understand that if you had a foreclosure and you can actually show them you had like some different circumstances such as maybe you lost your job, you had a medical emergency, they can reduce this to only 3-year waiting period. And FHA already have a 3-year waiting period on their loans And you can actually reduce this to 1 year if you see that you had some type of circumstances that made it where you had to just have this foreclosure. You can actually get it reduced to 1 year. When it come down to next VA loans, we're talking about waiting 2 years. In some cases, you may get it sooner when it comes down to VA loans, but you got to be certain circumstances that had to happen to make it be sooner, or maybe sometimes you can't just get it sooner. It is what it is, but definitely ask, okay? Now, when it comes down to the USDA, you have to understand that we're thinking about a 3-year waiting period, sometimes even sooner from here. But you have to understand, it depends on what happened. Did you lose your job? Did you get very sick? And then to actually improve your chances of getting another mortgage, make sure your credit is so much better than what it was before. Make sure you improve your credit overall, rebuild your credit back up. Make sure you save for a down payment. Make sure you have a stable employment. Maybe you documented these different circumstances that could have happened to you. Make sure it's documented, and seek advice from an actual mortgage lender that can actually help you with this process. But I hope that this helped you. Hey, beautiful people, it's Rickita, and I'm back with episode 156 of Credit 101. We're going to talk about how credit cards can impact your credit score. Now, a lot of people don't understand that your credit cards can help you and they can hurt you. So I want to go over, I think, about 6 different things I want you all to look at and just make sure you're on top of, to make sure that your credit cards are not affecting you in terms of when you're trying to go get your mortgage. It's actually helping you in a great way. So the first thing is, you have to understand that when it comes down to credit cards, your credit cards they're going to affect your credit score. So your credit score is like one of the most important things that they're looking at when they want to give you a mortgage. So your credit score is made up of different things though. And that the first thing is your credit utilization. I always tell people, try to have their utilization at 5% or below. So keep that in mind. So your utilization is going to be very, very important. Also, your payment history. With your credit score, your payment history is going to be a big factor in that too. I think about 30% of your 30 to 35% of your actual FICO score. So that's why I tell people, make sure you don't have any late payments. Set up auto pay on your credit cards. And then also, when it come down to payment history, if you got any late payments on there, work to remove it. Literally on my website, I do have, if you go to Rickita.com, you will be able to see a late payment removal. I have letters for those. So definitely I suggest you remove those late payments if you have it. And then also your inquiries. So again, your credit score is made up of your inquiries, probably about a 10% of your credit score, but still, it's still a piece of it. So anytime you apply for credit cards, you're going to get that hard inquiry. So you want to understand that you want to have these 3 things in check when it come down to your credit score, so that when you have a chance to actually apply for a mortgage, you know your credit score is at its best. Now, the next thing is the debt to income ratio. This is going to be really huge, you all, when it comes down to the debt to income ratio. When you got any payments on your credit cards, they have to include that in your debt to income ratio. And your debt to income ratio is your monthly debt payments compared to your monthly income. And a lot of lenders want your debt to income ratio to be a certain percentage. Okay, so you guys want to make sure that when it comes out to your debt to income ratio, any type of payments that you have with your credit cards, if you probably got $100 balance on it and you just paying a minimum, which is about $25 per month, you may just want to pay like the full $100 balance on that, so that you can report a $0 monthly payment for that. So that payment is not including your debt to income ratio, because every monthly payment that you have, especially if it's reporting in your credit report, they're going to include that into your debt to income ratio. And you don't want to have a lot of payments compared to how much income you have. You want to have as little payments as you can with a lot of income. That's what you want it to show as. So understand that your debt to income ratio is going to affect you. So I tell people, when it comes out to your credit cards, try to pay them all off if you can, because you can actually help with your debt to income ratio if you have them all paid off, or pay down the ones that's very, very close to just having no monthly payment. Because if you pay off a credit card, you don't have a monthly payment and you need to show 0. I don't care if it's $100. Well, think about it like this. You can have a $36 balance on an account, and it can have a $25 monthly payment. They're going to count that $25 monthly payment, even though you could technically, I almost had a credit card paid off. So I tell people just to pay off the credit cards, especially if they have a very low balance, because you're almost there anyway. Okay. Now, also your credit history. The older your accounts, the better you are, the better your accounts are, basically. We want you to have a lot of length in your credit history. So the longer the history is, the better your credit score is. And don't forget, your credit score is affecting your mortgage. Also, having a diverse mix of different type of accounts too can help with this. But understand that your credit cards and your length of history can impact your credit score, which in turn could impact you actually getting your mortgage. Now, mortgage approval and terms, you have to think about your chances of actually getting approved. If you have a very low credit score, your chance of actually getting approved for a mortgage is very, very low. So that's why I tell people, try to have a very high credit score, a nice credit score, so that you can get approved. Your approval chances are higher. The lower your credit score, the higher the risks, and they don't want to have a lot of risky borrowers. I can't even say that. They don't want to have a lot of risky borrowers. Okay, we also have interest rates too. So the lower your credit score is, the more you're going to pay in interest. When it comes down to your interest rate, they're going to base this off your credit score. So you want to have a nice credit score so that you can have a lower interest rate. And again, your credit cards could affect this. Just having poor credit card management, having late payments on your credit, messing up your credit. Your credit cards affect your credit, which affect your mortgage approval odds, you guys. So having all those late payments, having high balances, all these different things could affect your overall approval odds. And then make sure that you are managing your credit cards before applying. So we already talked about utilization. So pay down your credit cards, okay? And then make sure you have some at a $0 monthly payment. You get them to report a $0 monthly payment before you apply for your mortgage, so they don't have to include that in your debt to income ratio. And then avoid new applications too. Don't get a lot of new inquiries. We talked about inquiries can affect your credit score, which could affect you getting approved for the mortgage. So make sure you avoid too many inquiries. And then too, having new accounts added to your credit reports is going to mess up your age, which can actually drop your credit score, lower your credit score. So keep that in mind. And then make sure you keep checking your credit reports to make sure you have no new errors, or you're working to fix any old errors that you have. If you go to my website, Rickita.com, then you guys can be able to I have free dispute letters for you all to help remove any negative accounts. It's literally at the top, Rickita.com. I'll show you guys shortly, but this can help you guys remove any negative accounts that you do have. Okay. Now, after you secure your mortgage, it is some things that you have to do. I want you guys to maintain your good credit habits. Put all your bills on auto pay. Make sure you're paying on time and keep the balance low on it, and continue to check your credit to make sure everything is correct. You don't have any new negative accounts. I want you guys to continue to check. Hey, welcome to episode 157 of Credit 101. In this episode, we're going to talk about getting a mortgage after a short sale. So if you guys already had a short sale, you think about getting another mortgage, we're going to talk about the waiting periods. How long is it actually going to take for you guys to get a mortgage? So there's going to be different waiting periods depending on what you are going to actually do. So I want you guys to understand that it's different type of loans that you could take out. If you decide to take out like a conventional loan, typically you got to wait about 4 years after a short sale to qualify for a new conventional mortgage. You have to understand that there is some type of circumstances, which we're going to go over next, that can make these different periods actually be shorter. So we can go from 4 years to 2 years if you maintain good credit after getting your short sale and you had these different circumstances, which we're going to talk about. Another thing is for the FHA, usually you got to wait about 3 years. If you're trying to do a VA loan, you're looking at about 2 years, and in USDA, we're looking at about 3 years. Now, again, there's different circumstances that can make these numbers change. Okay, so we have to think about those different circumstances. So let's actually talk about a few of them. I'm talking divorce. If you guys had any like medical bills, you had like a lot of medical bills, you had basically a medical emergency, then they would consider actually thinking this as a circumstance where you don't have to wait 4 years. You can go down to 2 years, or a job layoff. Say if you was laid off at work, these different things, they're going to look at it as different factors. Okay. Now, different other factors going to influence it also. What is your credit score? Is your credit score a lot higher? Have you been doing great? Have you not had any late payments since? You have to think about that. And then what about your financial situation right now? Do you have more money? Do you have money saved? How is your debt to income ratio? What debts do you have overall? All of these things are going to be considered. Now, there are some steps that you can take after a short sale, you guys. After a short sale, start rebuilding your credit. Save for your down payment. Work with a mortgage broker, because a mortgage broker can be able to tell you where you're at, because they look at your credit and tell you where you at and what you need to do to be able to get your mortgage. And then they also, when you're able to actually apply for mortgage, or when you're ready, they can actually send your mortgage application to multiple banks and lenders. So I definitely like that. And then it can help you review your finances and review your budget too. Now, understand that a short sale is going to impact your future, but all you have to do is just make sure that you're staying on top of everything now. Yeah, you had a situation in the past. You know that you need to work on your credit. You need to make sure your money is together, and you just have to wait whatever that time frame is, and you should be able to get that mortgage that you want. But hopefully you guys found these tips helpful. And again, make sure you talk to a mortgage broker, because I like those better, because there's so many different companies they can shop you out to. They can be able to help you find a mortgage better than going to a direct bank, because a direct bank can only give you what they have. A mortgage broker, they can send you to that bank plus other ones, 30 other ones. So definitely look into a mortgage broker. Hey, beautiful people. Welcome to episode 158 of Credit 101. And in this episode, we're going to talk about the CAVERS system. Now, with this, let me just say this. I am not an expert on this. I'm going to just give you the information that I know, and I want you guys to do more research, because it's a lot that goes into this. But it's very, very important. And I think that a lot of time we should just let some sparks just fly in our mind to even do greater research. So if you're dealing with this problem, hopefully this is part of your full research, and hopefully it's going to help. I do have a blog that's going to go into greater details, but I just wanted to come and just say something, because I like videos, for those people that like videos just like me. So what is CAVERS? So you have to understand that CAVERS is basically a credit alert verification reporting system. So it's just basically a database that's used by the federal agencies to track borrowers who have defaulted on their federal loans, basically, or who have a history of federal debt problem. So we're talking FHA, VA, USDA, and SBA. So if you guys have had problems, or you had any defaults with these companies, it will be reported to the CAVERS system. Now, the thing is, people want to know, why does this even matter? Why this matter is because you can get a loan denial if you are in here. So if your name is in here, they say you're supposed to wait about 3 years to be able to get a loan again. So if your name is in here, and it's not the 3 years, you need to know that you're most likely going to get denied for a loan. Or sometimes they may ask for additional documentation, or you may just have a difficult time just getting approved in general, even if you're after that 3 years. So that's why this actually matters. So you can actually check your status to know exactly what's going on, see if your information is in the CAVERS system. First, I would tell you guys to check with your lender, because your lender can actually check your CAVERS on your behalf as part of your loan application process. When I watched another video about this, so I can learn even more about this, because I read up on it 2 times, plus I watched a video about this. When I did my research on here, he was saying that usually when you're in the mortgage process, they're going to check this system like almost at the end. So if you think it's a great chance that you're in this system and you don't want to waste your time, you could request to see if they can actually check it sooner. And you can also request a copy of this report through a federal agency that's managing your loan. So whoever is managing your loan, or any lender that's participating in this CAVERS system, they should be able to give you a report Also, it reminded me of when people said we weren't able to really get our credit reports like that back in the day. Like you had to get it from the actual bank or whoever it is that you were applying for, whatever loan. So that's kind of what I'm thinking about with this one. And then two, if you find that you are listed on this, you will need to address and resolve these underlying issues. So you have to think about paying off the debt or just settling these debts. Now, it's more than just saying pay the debt and settle the debt, because when I watched the video, and I let me see if I can even find it. It's supposed to be like, I think his name was the #1 student loan lawyer. I watched the video that he had on here about how to clear it, and paying it off was one of the things, but you have to understand too, it's a lot of money. They're not trying to accept settlements. And I think that you can actually try to get it cleared the same way that you could possibly try to get like your credit report clear in a way, but you'll have to try to see how you can do what you can do to get your name removed off of that. You can obtain documentation showing that your debt has been paid or resolved. That can help you. If it's your student loans that's within the system, try to see if you can do like a debt repayment. Yeah, try to see if you can do like a debt repayment. And not only just doing a debt repayment, they had a rehabilitation, and we had a special rehabilitation right now. And this is July 29th, 2024, when I'm recording this technically. It's going to come out a few days later when you probably are watching it, or you probably can watch it, the replay anyway, just later on. But the student loans have something now where it's a certain thing that's going on right now where you don't have to do the 9 months. They can actually put your accounts back into good standing. So that may be something that you all want to actually look into. Okay, just to make sure that you get this updated. Now, a few tips for avoiding this, and just make sure that you're paying all of your things on time, especially if it got to do with the federal government, paying everything on time. And then check your credit report to see if you got any potential issues, and then seek some type of financial counseling, like if you're struggling with debt in general, and you have to figure out what you're going to do about this issue. But I hope that this helped you all. Hopefully this, it can be some information that you guys can use in your future. Hey, welcome to episode 159 of Credit 101. In this episode, we're going to talk about how soon you can get a mortgage after bankruptcy. So I want you guys to understand that there's different types of bankruptcies. You have to understand that there's the Chapter 7 bankruptcy. That's usually where they're going to wipe out and liquidate everything throughout your bankruptcy. And most of these are unsecured debts, and they're all going to be discharged, and it's going to stay in your credit reports for up to 10 years. And then you also have Chapter 13 bankruptcy, which is going to stay in your credit reports for up to 7 years, but it's basically a repayment plan to settle some debts. It's usually going to be about 3 to 5 years, depending on your income usually, and the types of debts you have. So it's going to depend on a type of bankruptcy. So you have to think about, did I do Chapter 13 or did I do Chapter 7? Now let's talk about the waiting periods now that we know what you filed. So for an FHA loan, you have to wait 2 years after a Chapter 7. So you're going to have to wait 2 years after the discharge date. And then for Chapter 13, you're going to have to wait 1 year after starting the Chapter 13 repayment plan. And then you also have to ask for the court's approval. And you have to make sure that you've been making on-time payments on everything since then for them to even really approve you. Next, you have a VA loan. Usually they're going to have you wait 2 years after the discharge of the Chapter 7. And if you have a foreclosure, the waiting period is 2 years from the foreclosure date. So you have to think about both of those. And then also you have the Chapter 13, which you have to wait 1 year. Again, you need the on-time payments and the court approvals for that. We have USDA loans. This loan, you have to wait 3 years after the discharge date of Chapter 7 bankruptcy. And if you had a foreclosure, you have to wait 3 years from the completion of that foreclosure. And then we have Chapter 13, which is the 1 year. Again, on-time payments and court approval. So I'm starting to see a pattern here, you guys, and I want you guys to see it too, is that 1 year for Chapter 13, as long as you've been paying on time. So you have to make the on-time payments, and then you have to receive the court's approval. Now, last but not least, we're going to talk about conventional loans. For Chapter 7, you can apply 4 years after the discharge of Chapter 7, and then 2 years if you do a significant down payment. And then also chapter 13, you got a 2 years after the discharge or the dismissal of chapter 13 with strong credit and a solid payment history. So that is a lot, but I want you guys to know about the different waiting periods depending on what type of mortgage you want to get, because it's not a one size fit all. Now you have to understand the factors that's going to be affecting your eligibility. So your credit score, the higher your credit score is, the greater chance you have actually getting approved for a loan. The larger your down payment is. So save as much as you can so you could possibly put down a higher down payment. Also, your income, how stable is your income? Are you stable enough to make mortgage payments? Because that's what they're going to be looking at. Do you have a secure and stable job before you apply? How long have you been on this job? They want to know also your current debts. So keep in mind your current debts. You want to make sure that you're managing this and reducing the debts that you have too, so that you can have a greater chance of getting approved. So make sure you're having this together. And then keep in mind too, your debt to income ratio. We talked about that in a previous episode. Check out the different episodes. This is episode 159. Check out the different episodes because we talked about debt to income ratio in terms of actually getting a mortgage. And then your bankruptcy discharge status is going to be very, very important. They want to make sure that you fully discharge this bankruptcy and it's closed before you apply for your mortgage. Now, there is some steps that you can technically take to before you apply for a mortgage. Is you can review your credit report, see if there's any errors or anything negative on your credit reports. Start working to remove that. You can start saving for your down payment. You can actually ask to get pre-approved for your mortgage. This can help you out a lot. So that you can even know if you can get the mortgage actual pre-approval. They're going to tell you yes or no. And then consult with a mortgage professional. Talk to a mortgage broker about your different options. So these are a few things that you can actually do. Hopefully this help you understand what you can do in terms of if you're able to even get the mortgage, now that you're able to get the mortgage, what you can actually set up to make sure that you can actually get approved for the mortgage. I hope this all helps. Hey, welcome to episode 160 of Credit 101. In this episode, we're going to talk about how soon can you get a credit card after you file bankruptcy. Now, the timing is honestly going to be depending on the bankruptcy that you're going to file. So let's actually talk about that. If you guys file Chapter 7 bankruptcy, usually you can get credit cards immediately after your discharge. I see a lot of people saying that they're able to get, like they had Capital One, they included them in their bankruptcy, and Capital One gave them another credit card once their bankruptcy was discharged, like literally. Now, usually it's going to take about 3 to 6 months after you file for your bankruptcy for it to be discharged. But you should be able to get credit cards immediately. You also can get credit cards immediately after Chapter 13 bankruptcy. I believe you do have to ask for approval to apply for anything when you're in Chapter 13 bankruptcy. Ask, because I just cannot be the one to tell you that. But I have seen people, and you know what? When I filed Chapter 13 bankruptcy, mine was dismissed. So I guess I can talk. I filed for, after I did Chapter 13 bankruptcy, I didn't go through with my bankruptcy. It was dismissed. But after I filed for it, I got credit cards right away, and my credit scores went up to the 700s. Even myself, in less than 6 months after Chapter 13 bankruptcy, because I usually say wait a year after filing. And I did a lot of research on this. My notes is even telling me to tell you that right now, because that's what my research says. But I did not wait that year. So let me just throw that out there. But those were mostly, they were all secured debts. And when you file Chapter 7 bankruptcy, you should be able to get unsecured debts, but understand that it may be better for you to apply for secured debts because you can possibly have like no annual fees. When we're going to talk about this in the next one, let's start talking about it. The different types of credit cards you might qualify for. So you guys can qualify for secured credit cards. You may have a decent chance of getting retail credit cards, like store credit cards. A lot of the credit cards is going to be subprime credit cards. These credit cards are designed for individuals with poor history, those that's looking to rebuild their credit, but they got horrible annual fees. If you see maintenance fees, these are the things you want to stay away from, okay? And these debts also can be unsecured. credit cards, we don't have to put a deposit down, but understand that your credit is probably messed up. Honestly, right after you file bankruptcy, you have not worked to try to remove the bankruptcy. You not have no, you didn't try to work to remove the accounts on your credit reports yet. So if you have not tried to do these different things yet, your credit score is going to be very, very low, which means that you're going to most likely get approvals from companies that's going to try to charge you a high fee in terms of your annual fee and maintenance fees. And we don't want that. I would rather you guys get a secure credit card with Navy Federal, Discover, and Capital One. Those are the top 3 to go to, and then find a credit union in your area or whatever bank you bank with. Get a secure credit card with them because they most likely don't have an annual fee. And then some of them can give you cash back and rewards, like the Discover credit card can give you rewards. But Discover do not like a bankruptcy on your credit report. So if you're going to apply for it, I would suggest you remove that bankruptcy first before you apply, or just move on with another company and keep asking Discover to let you in. And every month, just keep asking as you increase your credit score. And whenever they say yes, you get in there. Okay. Think about that with a lot of these credit cards, especially when you're in a process of trying to repair your credit after you messed it up. Now, there's going to be some factors that's going to go into you actually getting approved. So your credit score, the higher your credit score is, you guys, the greater chance you have getting approved. So make sure going forward after your bankruptcy, you paying everything on time. Think of this as a new chance at life. You're not messing up anymore, paying everything on time, everything on auto pay. You're not going to get any credit cards that you're not going to pay. You're just going to make sure that you have everything in order. Also, your income. Depending on your income, certain lenders are going to look at your debt to income ratio, and they're going to consider if you got enough money to pay these debts that you're trying to basically get. And then they want to ensure that your bankruptcy has been fully discharged or closed before you apply for credit. So this is something that you can check on also. And then they want to see that you have demonstrated some current financial habits that's showing that you have great behavior when it comes down to credit. Again, you're not maxing out your credit cards when you finally get them. You're making everything on time. You're paying everything on time, and you're not getting to the point where your debt to income ratio is just out of control. Now, the next thing is you guys have to know like the steps to take before applying for credit. If I were you all, I would check my credit reports. Anything that's on there that's reporting inaccurately and is negative, I'm working to get those things removed, including the bankruptcy. A lot of times they're not reporting the bankruptcies correctly. So that'd be another thing I know I need to get off of there. So I would do that, remove any negative accounts. I will apply for new credit. I always tell people to have 4 credit cards and 2 installment accounts. So again, if I have to do it all over again, I'm going to have this bankruptcy on my credit reports, I'm going to try to go for secure credit cards that's going to graduate to an unsecured credit card. I'll just put that money down on it, like Capital One, Navy Federal, and Discover. Those will be my top 3 I'm going to go with. And then if I need more credit cards, I'll think about Open Sky, and then I'll think about the credit builder card. But I'm going to show you all my website so that you guys can see how to navigate it, because I have all these credit cards on there so you can actually check it and get 2 installment accounts. If you already got student loans, that can help you. If you already got a car reporting, that can help you. But you could technically, if you know you need to get another vehicle because you gave your vehicle, whatever the situation could have been for your bankruptcy, maybe you can get another vehicle that can report to the credit bureaus. But I would suggest you guys wait. Don't get one so soon. I would suggest that you all wait to actually get the car when you get your credit score up, or try to see if you can get a co-signer for that. But you can also do like personal loans. Navy Federal got their pledge loan. These are the different things that you can actually do. And this is things that I'm suggesting. And then make sure that you guys consult with a credit counselor and save money for emergencies. Look into Dave Ramsey. I like credit, but I still love Dave Ramsey in terms of debt. Having debt around is not a good thing, because you don't want to get yourself back in the same situation. So look into Dave Ramsey to look at some different things you can do to save money and actually make sure you don't go back into debt. Hey, beautiful people, welcome to episode 161 of Credit 101. In this episode, we're going to talk about how you can boost your credit history without actually opening new accounts. So I always tell you guys that I want you guys to have 4 credit cards reporting on your credit reports and 2 installment accounts. You guys may already have, like me, I have a lot of credit cards. if I add any new credit cards in my credit report right now, my credit score is going to be lower. So I want you guys to come up with different ways, which I'm going to tell you now, to actually increase your credit score. And this is what I look at too. And I'm like, oh my gosh, I need a little bit more points. I want to be at a certain number. These are different things I look at too, to see if I got all of this in check. And this can help you all too. This is really for those people that already got more than I would say 4 to 8 credit cards, already reporting your credit reports. Sometimes adding a new account is going to lower your credit score, because you got to have a new hard inquiry and your average age is going to be messed up, and that's not what we want. So hopefully this helped you all, but let's get into the different things that you all can do. Now, the first thing is you have to make sure that if you want to boost your credit score, you want to make sure that you're paying all of your accounts on time. So ensure that all your bills are paid on time, including your credit cards, loans, utilities, and they are paid before the due date. Set up automatic payment and reminders too, to avoid a late payment. I tell you guys that all the time. I have all of my minimum payments set on auto pay. And if you guys find that you have late payments on your credit reports, I suggest you all remove those late payments. On my website, here is my website here, Rickita.com. You'll see I have dispute letters for late payments. Work to remove those late payments from your credit reports. Okay, work to remove those late payments from your credit reports. And I also have other letters there if you have other negative accounts too, and you need to actually increase your credit score. I'm going to show you that at the very end too. So just stick around. I'll show you guys how to get those letters, because I even have some free ones available. Next, you want to reduce your credit utilization. Now, a lot of time they say keep your credit balance below 30% limit every month. I tell you guys to pay your statement balance by your due date and keep that number at 5% for the best possible credit score that you can have. So just see if you can pay down some of your credit cards right now to help with your utilization, and that can help with your actual history and actually your credit score too. Think about asking for an increase on your credit cards. So ask these different companies that you have, ask them for an increase. So the higher the credit limit, that can help improve your utilization also. So contact their credit card issuer and request a credit limit increase. And then this can help you with your overall utilization too, bringing it down. So this is a great one. Make sure that you guys maintain your old accounts. A lot of times people want to close these old accounts, but keep an older credit accounts open, even if you don't use them frequently, can actually help you keep your credit score at a high number. Closing your old accounts can shorten your credit history, and it can negatively impact your credit score. So make sure you guys are not closing these accounts. Just keep them open. If you have credit cards, make sure about every 6 months you go and swipe it. I don't care if you're just getting gas, or if you got a store credit card, you got a Victoria's Secret credit card, get you some underwear or something, just one little thing. They usually have a coupon too, for if you got store cards, you want to maintain it. You really don't want to buy nothing new. If you want to keep that account open, you have to use that credit. So make sure that you guys maintain your old accounts. Avoid missed payments. We kind of went into this already when I said make sure you set up everything on auto pay, but I'm not telling you guys nothing wrong about this. Please have it all set up on auto pay, and then double check to make sure that it is paid every month. I literally have a spreadsheet where I just have all my bills paid, and in the beginning of the month I just pay them all, and then I go down and see like what exactly I need to put my eyes on, or what need to be paid, or what don't need to be paid. I just want to make sure that this was paid for the month. The statement balance was paid, not just the minimum, but the statement balance. I go in and force a payment just to make sure everything is paid on time. And I want you guys to really avoid these missed payments. And then make sure that you guys are managing your debt effectively. Okay, this is another big thing that you guys need to look into. Reducing your outstanding debt can help improve your credit score in general. So focus on paying down some of your existing debts, and some that have that high interest rate too. And if you can, look into Dave Ramsey, because he always talk about paying off debt and getting rid of your debt. So this can be a great one for you guys. And dispute any negative accounts. I told you guys that I'm going to show you guys the letters that you can use, but definitely dispute your negative debts with Equifax, TransUnion, and Experian. And if you need to, you could. I don't want you guys to do it. I wanted you guys to not open without opening any new accounts, but think about a secure credit card. If you guys is in a different place where you can't get any type of credit, think about getting a secure credit card, because that can help you with your credit history. And this is for those people that's like, Rickita, I don't have 4 credit cards. I don't have any credit cards. Like, I need to improve my history. Just get you a nice secure credit card that's going to graduate, where you're not going to think about closing that credit card anytime soon, because they don't have an annual fee. Like Capital One, Discover, and Navy Federal. Look into those. So those can help you for sure. But if you follow these different tips and then check out the dispute letters I'm going to show you, then you can have a great chance of actually boosting your credit history and your credit score without opening any new accounts, and start working to remove any of those negative accounts, because that can help you all tremendously.